Hi traders, welcome to this video on trend lines as part of a series on trends and trend channels and moving averages, part 5 that is. My name is Chris, and first of all, this risk disclaimer explaining that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, we're going to take a look at trend lines as the focus for today. Now, last week we talked about trend channels and how they're important for understanding the market structure. This time we're looking at single trend lines. So we're only looking at a single instead of a double, where you have, of course, a channel or even 5 lines within a channel. Single trend lines actually are just connecting support and resistances, and there does not have to be a parallel trend line in the same angle. Right? So we just draw one trend line and it could connect tops and bottoms, or it could even connect some tops and some bottoms, right? In some cases. Here you see resistance trend lines neatly connecting the tops, and you see a couple of support trend lines connecting the bottoms, and they could have all angles, right? A resistance trend line could have an upside angle or a downside angle. Let me show you, in fact. This one right here, right, is a resistance, but it has a bullish angle. There is a support line, but it has a bearish angle. All right, so it all depends, and you can see that sometimes they have the opposite role as well. You can see that sometimes when a trend line breaks, in the future, it will be the opposite. In the future, it could be support, right? If it's a resistance at first, price goes through it, like in this example, then hooks back to that same trend line. It's not resistance anymore, but support, and most of you probably know that, but it has to be said. So that is very important to keep an eye on. Trend lines that are broken as well. And we'll dive into what type of trend lines do I consider, useful trend lines, when, and how does a good trend line look like, first of all. Well, one of the things you want to look at is the number of hits. It's kind of like a basic characteristic of a trend line is that there are a decent number of hits. Well, the minimum basically is 3. Once we have 3 hits on a trend line, then the trend line is a confirmed trend line. If there are two hits on the trend line, it's basically a potential trend line. And it could be of value, but there's less pattern, there's less confirmation. Whereas if we have 3 hits, 4 hits, 5 hits, the fact that that trend line is respected by the market is becoming a pattern. It is visible to us and maybe others. And you can rely on that trend line a bit more, either as a break or as a bounce. So that's important. 3 or more hits on the trend line is better. Doesn't mean that 2 hits is not important. It could still be useful information, especially if you're looking for a breakout in a strong trend with the trend continuation. All right, so if you're looking for the trend to continue, then sometimes the correction will only give you a trend line with 2 hits. All right, let's take a look at opening an account with Arrow Markets before we finish this webinar and this video. If you're interested in trading with Arrow Markets, take a look at this link, because we're going to be giving away a trend moving average course. And because we're talking about trends and moving average in this series of webinars, we thought that would be very appropriate. Plus, we give credit for trading as well. So take a look at this link to find out more information. All right, another important thing about trend lines is multiple hits. You got to have multiple hits there, but what is the difference between, for instance, 2 candles hitting one trend line, or, for instance, a lot of space between those candles? So let me explain that a bit better. If there are 2 candles right next to each other and they're both hitting the trend line, do you consider that 2 hits, or is that 1 hit? I consider that 1 hit, right? Because two candles next to each other, I would not consider to be separate hits of the trend line. So that's already one distinction I make. Even, in fact, if they're fractals, if you see these little fractals here, they indicate support and resistance. So if you have 3 fractals, then it's already a good chance that there's 3 hits. But if the fractals are very close to each other, and that means that these candles are actually pretty near, then I would even sometimes consider that to be 2 hits. So it really depends. If you got good spaces, between the candles, for instance, let me give you an example. Right in here in the middle, you got 1 hit here, 2 hit here, and then later on the third hit, and later on the fourth hit. There's a lot of space between the hits of resistance. So that's a valid trend line. There's a lot of space. There's a lot of hits as well. That's a good mature trend line. But if the hits are too close to each other, for instance, in this green example on the right lower corner, you can see there were two hits here at the very beginning, and I would consider that to be questionable if that's one or two hits. Probably I would just consider it a one hit in most cases. So that's just to give you understanding that yes, we're counting the hits, right? And we want multiple hits, but we don't want to count every one, especially if they're candles very close to each other. All right. So when are we going to get trend line breaks and bounces? Basically, all of these trend lines, in fact, could be used for both, and they could offer interesting trade setups in both ways. And there is no really 1, 2, 3 easy rule for that. It depends on market structure, depends on higher time frames, what is the trend on multiple time frames, and what is the market doing with patterns and stuff like that. And then I make my analysis and I decide whether I'm looking for a break or bounce, or sometimes even both. But it is true that in general, trend lines can be used for all of them. And as you can see here, in fact, I used it in a live webinar with Admiral Markets. I predicted the bounce, the break of this orange line, the break of this pink line, right? And in fact, the bounce off of this orange line. All of those were trade ideas that worked out well: the break, and the bounce. And that's just something that you will have to, can see, of course, with Admiral Markets, or just gain the experience to know which one seems more likely. And sometimes the one that we think is more likely doesn't happen, and that's fine. If it doesn't happen, then I'm not trading it, so that's also okay. Now, in this case, you can see when price is making a correction, all right, then looking for a breakout back into the direction of the trend is good, and we see the follow-up to the upside here. And if we see then already one higher low, then we know that another higher low is possible, and that could be a potential bounce at support. So that was one of the reasons why I thought that was a good confluence with fibs and trend lines as well. So trend lines, good for breaks and bounces, really depends on the analysis done. All right, some other trend line characteristics regarding proximity and relevance. Obviously, if we have a trend line that is far, far, far away from current price, like this green one, doesn't make sense to crowd the chart and put it on our chart because it doesn't give any info. We might as well remove it, take it away, and if price ever gets there in the near future, or whenever it does, we can perhaps put it back on. But it doesn't make sense to leave it there because it just distracts us from things that are really important. And if it doesn't have any relevance, it's better to take away the trend line. Having multiple trend lines on the chart, even single trend lines, is perfectly fine. As you can see, I've used many trend lines, and there's no need to limit yourself to one or two, as long as the trend line you think has value, has perhaps a good angle for whatever the reason you think is important, or has a good number of hits. As long as you have a good reason for it, don't limit yourself. You can even leave all trend lines on the chart, because look at that. Look at this black trend line here. It was support, then became resistance, and yet again resistance. So sometimes leaving those trend lines on the chart is not a bad idea. And last but not least, drawing a trend line that cuts through pieces of the candle and wicks is okay. There are two options. You can nicely use the exact highs and lows for a very exact trend line. That's great. If that works out, perfect. But it's not a must. I'm okay with drawing trend lines that go a bit through a candle, or a bit through several wicks, or even several candles, as long as I don't leave an entire candle outside of that trend line. That's where I put the border myself. So from that point of view, it's good, but you should get something, an advantage in return. The trend line has to become better because there are more hits, there's a better angle, or there's more space between the trend lines, something like that. So we're going to continue with some outer and inner trend lines. First of all, I wanted to make you aware the last few days of the Accurate Pivot Point strategy with the €500 discount, getting a lot of great setups here, on the accurate pivot point strategy, and it's available at this link. All right, so we're going to talk about steeper and shallower trend lines. Basically, a steeper trend line has an angle of 45 degrees or more, and we're looking at about a chart with 150 to 200 candles on it, because of course, less or more candles changes the angle of the trend line. So we're looking at a chart roughly like this, and if you have a trend line with an angle that's more than 45 degrees, well then it's a steep trend line. And anything between 30, 25, 20-ish, and 45 is a medium trend line. All right, so connecting these tops could have been a medium trend line right in here. Right, that's a sustainable angle, but a steep trend line indicates momentum. And momentum is perfectly fine and is a great thing to trade, in fact. But with the trend line that steep means that that particular angle will not last very long on this time frame, right? So on a lower time frame, it might look a bit better, that angle, but on this time frame, the momentum can last long. I'm not saying, but just be careful that eventually a bigger correction could occur. All right, so that's why when you take a breakout against a steep trend line, there is a substantial risk in that, because the price could correct a bit, but if there's a momentum going on, then trading against that momentum could be very dangerous. That's where traders, I think, do run into trouble when they're trying to trade against momentum. All right, so the counter trend break could make sense, but I think it largely makes sense if there's a bigger trend going on. Let's say on a 4-hour chart, the trend is down, and on a lower time frame, there's a 5-minute reversal, or not a reversal, a retracement to the upside, and there's a steep trend line that connects the bottoms. Let me make a drawing of that. So we have downtrend, right? Clearly downtrend like this, but on a smaller time frame, we see price basically making a retracement. And if you then put a trend line that is steep below the bottoms, right? And then price breaks that steep trend line, there is a good chance that the bigger downtrend basically will continue. And that could be a very good moment for a steeper trend line. But certainly, in other cases, trading against the trend, it's very risky, and I definitely would warn against that. All right. There's another way of trading it, of course, is that one could trade the bounce off the trend line. For instance, trying to trade it when it gets back into the resistance could be a very good way of trying to trade a piece of that momentum and catching a small part of the continuation. All right. Then we got medium trend lines. Well, those could be trend channels, or they could just be balanced channels, basically prices at an angle where you have price rising and correcting a bit, and rising and correcting a bit. So you got a balanced angle like this, for instance. That could be a trend channel, as discussed in the previous video. Shallow trend lines, in fact, are a totally different ball game. The angle is less than 20 to 25 degrees. That means that there is a correction going on of some sort, at least. And with that happening, basically price is just often going sideways and showing lower levels of momentum. And when this happens, you will be often seeing corrective chart patterns of all kinds of types, like bull flags, bear flags, contracting triangles, and stuff like that. These shallow trend lines are actually great for breakout trades, because when price, at least some of these patterns, I should say, the thing is that when you have, for instance, a trend going on, and you get a contracting triangle, and the break of that contracting triangle is often a pretty interesting trade. All right. Now, some of these breaks are going to be less interesting, and that's a bit of a fine definition here. But basically, if the correction is taking quite long, and you get on a 4-hour chart a downtrend, but you already have on a 4-hour chart a higher low, well, in that case, you might consider the fact, and be careful the fact, that it could be a bigger correction before price makes that break. All right, so you want to be, in that case, perhaps a bit more on your guard for a false break, and look for price action confirmation signals and lower highs, for instance, as a confirmation of a break. Right here, we got a break of a big triangle on the AUSD. The break worked out fine, as you can see. Right, went for a decent distance there. But not all the time these breaks will be equally pleasant. But in general, shallow trend lines are good for breakouts and trend continuations, whereas shallow lines are better for trend basically bounces. Okay, so shallow trend lines indicating patterns and could be a very interesting thing to keep an eye on when looking for patterns. All right, thank you so much. Take a look at Twitter and our YouTube channel. We're going to be releasing a lot of material through YouTube. So if you would recommend that to your friends, fellow traders, and family, we would be highly appreciative of that. And thank you so much for joining. Wish you all good trading. Cheers.